these aren't the only 5 by any means, right? Happy 5 Fact Friday. 5 Fact Friday. I'm Charlie Lambden, and it is 5 Facts. Morning, everybody. No slurp needed because it's just cold coffee this morning. So I'll spare you the disgusting slurp. It is Friday, the 25th of April, 2025. And so it's time for another weekly roundup of the 5 most significant newly reported facts affecting the housing market. Now, these are the 5 that I think are the most important. Sometimes I miss some, and I'm always happy to hear from anyone that thinks I've missed some. I did actually ask all of my followers on X last night, what do you think are the biggest impacts? And I didn't get any that aren't included in the 5 we're going through today. At the end of this 5 facts, which are going to be quite short today, I've got another appointment in half an hour. I've got to be gone by then. I'm going to do a live exercise using AI to do a, for instance, comparison between buying with a mortgage and renting whilst saving and investing to save up to buy a house outright, to see which one gets you to outright ownership of your home the soonest, because it's not as obvious as you might think. Now, I'm not saying I've had the most extraordinary reaction from what I can only describe as sort of zombie borrowers. No, you must borrow, just borrow. And none of them are doing the numbers, that they're sort of plucking old tropes out of the air. And of course, there are circumstances under which you will end up owning faster by buying with a mortgage and paying it down faster, etc. But it's not always the case, and it is individual. And so at the end of this, I'm going to ask you, the live audience, to give me some parameters to put in. I want to do an example of what you should all do if you are in that camp of thinking, is buying or renting and investing going to get me to outright ownership fastest? It's not always obvious, right? But there is this misplaced belief that no matter what, you will own faster if you buy with a mortgage. And that is not always true. Sometimes it is true, but that's not the only consideration. But I have no pre-prepared figures for this. So I will rely on you, my reasonable and calm and considered audience, to give me some actuals, numbers to plumb in. And so I can show you basically how to do it yourself. So you can put in your own numbers. There's quite a long list of things to go through, but we got to try and snap the zombie borrowers out of just going, I must borrow to buy a house. It's not necessarily true. Sometimes yes, sometimes no, but do not automatically believe that it is always the fastest thing to take a 32-year mortgage, which is the average duration of a first-time buyer mortgage now, and think that that's going to get you to outright ownership the fastest. Because the one thing I think we all agree on is that ultimately outright home ownership is the goal for people who don't want to be paying rent into their old age necessarily. And I share that goal. And the whole purpose of this channel is to try to help more people end up owning their home sooner. That's the goal here. So don't shoot me down when I say, sometimes renting and investing and saving might be faster, right? And in the example I did in the video on Wednesday night, the numbers I did there, it was, the mortgage was 30 something years, and saving and investing with a 5% adjusted for inflation, 5% annual rate of return on your investments at $500 a month, it got you to the outright ownership of the equivalent property in about half the time. And that's just blown some people's minds. No, Charlie, we will not accept this is possible. It must be, you must just borrow, okay? And even for me, it was a bit of an eye-opener about just how deep the conditioning and gaslighting goes to British society. You will borrow and you will pay interest for decades, probably into your retirement, and you won't own your home until you've retired, and you'll have nothing left to live off. So then you will remortgage your owned house to pay for your care, and we will take interest off you. Okay, because that's the trap. That's the trap. If things don't go as you hope in life financially, for some people they do, for some people they don't, and you end up having to pay your mortgage into retirement and having been unable to save anything, because if you're still paying off a mortgage, we should assume you don't have any savings, because if you did, you'd pay the mortgage off, right? Assuming that owning your home is the goal, not having a portfolio of investments whilst also borrowing. I'm not a leveraged person here, okay? Leverage is something that you do if you are a high risk investor. Different topic, different channel, absolutely fine. And I know there are people who watch this who are seasoned leveraged investors, okay? But for an awful lot of people, that's not an option. They're just never going to be someone who's crunching numbers on a daily basis and looking at yields and returns and risks and inflation and all that kind of stuff, right? Because frankly, to those of us who do or have done it, and I did it for a living for a few years in the city, eventually, after so many years of staring at numbers on screens, it's not a nice way to spend your time. It's not. I think, you got to get up and get out and enjoy the world, not just be staring at the basis point changes on the returns on your portfolio all the time and getting obsessive about it, which is what some people think it's like when you want to be an investor. And it's true. It's true, right? There are some cross-eyed investors out there. That's not a life, I don't think. Anyway, sorry, that was quite a long 6-minute ramble before we even get into the 5 facts. But it was actually this story here that prompted me to do this thing. Hang on a second. If monthly rent and a small deposit mortgage repayment are basically the same in some places, and remembering that when you're renting, you don't have any additional occupier costs. That rent is it. Rent and bills. You're not going to get any maintenance shocks or anything like that. You're not going to pay any service charges. And if you are buying with a mortgage, the mortgage amount is the minimum you'll pay. The rent is the maximum you'll pay, which means that you are in a safer position to have surplus income used and put aside to invest. When you're paying a mortgage, it just blows my mind how many first-time buyers think that's all it costs to buy a house. That's all it costs. And they don't factor in the buildings insurance that you will be required to take out by your lender, for example, not included in your mortgage repayment calculation, right? And the maintenance costs, and honestly, I don't care what you say, you might get lucky, it might be less, but if you don't budget 1% a year of the value of your home for maintenance, you will get caught out at some point and you won't have the funds to do it. What, Charlie? That's ridiculous. I'm not going to spend $3,000 a year on property maintenance. Yes, you are. You really are, because just that's how life works, and it always costs more than you think. And you might have a couple of years with very low maintenance costs, and then you're going to have a big bill. There's going to be a roof or a leak or plumbing or central heating or all of these things that people don't factor in. Right. Okay. Let's get through the 5 facts quickly, and then we'll come back to this and we will do a live analysis. And the point of that will be to show that every single person's situation is different. And if you I just want to show you how to do it for yourself so you can work out whether it's what's right for you and what's not. And for many of you, borrowing with a mortgage will be the better way and the faster way to achieve home ownership. For many of you, but for some of you, it won't be. Depends where you live. Righty-ho. Let's get into it. This came along this morning as well. April Mortgage launched 7 times loan to income. Woohoo! But before we get into that, so HSBC reduces, this is fact number 1. And the facts are lenders relaxing lending rules, number 1, mortgage rates competition hots up, number 2, government borrowing exceeding all expectations as the tax take falls, threatening further tax hikes is number 3. So that's government borrowing going way over forecast. Number 4, the Pylon penalty. So Ed Minibrain's net zero nonsense is going to be affecting a lot of, in some rural areas, knocking up to £100,000 off house prices, as reported by the Telegraph. And number 5, the topic I've just been talking about, which is zombie borrowers have a meltdown over my suggestion that renting and investing could be a faster way to outright ownership. Here's fact number 1. HSBC reduces stress rate to boost mortgage affordability. And what that means is that, well, in this particular case, they reckon that 20,000 more people will qualify for a mortgage because of these relaxed lending situations. Now, if you're one of the 20,000 people and blind commitment to being a borrower for the next 30 years of your life is what you want, then this is good news, right? But if you're worried about housing affordability and house prices constantly getting out of reach of first-time buyers, this is bad news, because when you boost borrowing, when you boost finance, this affects house prices far more than how many people there are in the country, for example. Right? So this is good news for individuals. It helps get them to a house. It's bad news for housing affordability overall. Right? Because every time they boost borrowing amounts, it works against affordability for the larger market as a whole. That's fact number one. Fact number two, this is reported on Money Facts this week, and we've got mortgages. So nationwide 5-year fixed rate mortgage for 60% loan to value is now priced at 3.89%. That's cheap, but there's a 1,500 quid product fee. NatWest for a 75% loan to value is now down to 4.08%. Right. So Lloyds Bank, they're all doing it, right? They're all doing it. Now, what does this mean? This is relevant to the whole theme of this week's 5 Fact Friday. If you are a business whose business is lending money, you aren't making money if you're not lending money. And a lot of people don't get this, right? They think that lenders are doing us a favor. No, they're not. Lenders are doing themselves a favor. Homeowners take much more risk than lenders do. And this lending war, which is great for getting mortgage rates lower, is a symptom of the fact that the lenders aren't lending enough and need to lend more, because they only start increasing their risk, for example, relaxing lending rules, when they need to lend more. Not want to lend more, need to lend more to justify their overheads and their organization. Because if they're not lending, they're not earning. It's that simple. They cannot charge interest, which is how they make their money, on money that they haven't lent. They're only earning money when you've borrowed it, right? And all the time you owe them money, they're making money. And they're trying, because the overall net mortgage amount in the country has been going down. People have been wising up and paying off mortgages faster. And the lenders are going, no, we must lend more. What can we do? We'll lend more. So that's what's happening. So that is definitely impacting the housing market. Unfortunately, I don't think it's going to be enough to offset the increase in stock coming to the market. We have, for example, here, let's just quickly look at Christopher Watkins. Here we are. So this is total properties coming to the market to date this year. And you can see that it is significantly higher than the 16% higher than the 9. That's properties coming to market. So the number of unsold properties in the market is higher than it has been for a very long time and continues to climb. All right. Right. Next fact is that this week the government announced its borrowing figures. And guess what? The Chancellor has massively overshot her borrowing expectations. And I mean, the OBR's borrowing forecasts for the year have been blown out of the water in like 1 month. It's such a joke. It's such a joke. Honestly, you would not have people with this level of financial incompetence running a small business, let alone a country's entire economy. Okay. And so basically, whether or not the Tories left behind a £22 billion black hole, leave that to one side. Rachel Reeves has now created a £25 billion black hole of her own in 10 months. Quite an achievement. And why is this relevant to the housing market? Because their only choice, okay, to confront this problem where the amount of tax they're collecting is going down, not up, and it's not enough to pay their debts, they only have two things they can do. They can put taxes up and they can cut public services. There's nothing else. So if she wants to stick to her fiscal rules, one or both of those things is going to happen, and that's going to tighten the screws on the economy even more. I'm sorry, I don't know why my picture's gone all jumpy. That's very frustrating. So that's fact number 3. Fact number 4 is the Telegraph reporting the Pylon penalty, knocking £100,000 off house prices in net zero blow. That's pretty self-explanatory. They're planning many, many more Pylon cables to be installed around the country, and that's going to hit property prices in those areas. Ed Miliband's performance on Sky News yesterday was just an embarrassment. Like, without questioning the need to reduce carbon emissions, without questioning whether or not there is climate change, the net zero strategy is one of the things killing this country's economy faster than anything else. And we're being taxed for it, and it's not working. And even if it did work, it wouldn't even be noticed in the margin of error of global emissions. And we're all paying for that failed thing. It's an absolute nightmare. Right. And then fact number 5. This is the post I put up, which, I mean, less than 48 hours ago, okay, saying that if you buy a £300,000 home today with a 50k deposit and a 30-year 5% mortgage, you would need to sell it for £965,000 at the end of the 30 years just to break even. And in fact, it's more than that, because I didn't even include the maintenance costs in there. Anyway, I put the calculations in there, and look at that. It's at 154,000 views of that post in less than 48 hours, and kicked off this massive hornet's nest in the comments underneath. And everyone giving everybody giving anecdotes of why, no, that's not true. Now, and there are people thinking that I'm advising people one way or the other. No, I'm not. I'm not advising anybody. This isn't advice. This is an observation with numbers to back it up. And people start putting in numbers and going, oh, it doesn't work under this. It doesn't work under that. So this has worried me, because it's made me realize why so many people are overpaying, because so many people just don't even question whether or not buying is the fastest way to ownership versus renting. So can I please have from you, can you please put in the live chat right now, right? There are 331 of you following, and I know that, so half of those are on YouTube, the other half are mostly on X. Can you please give me any example, a real world example, okay? And I'm going to go into Grok here, and I'm going to just show you what you should do. Okay, this is what I'm recommending you do with your numbers. I can't keep going backwards and forwards between the Christopher Sato says I didn't even include stamp duty in my buying calculations, so I should do that. Here we go. Here is me doing a live, for example, situation about what you should do. Okay, now I don't even know what the results of this are going to be, and it doesn't matter whether they're one way or the other. I just want to put in an example that you can follow to put in your own numbers that meet your financial circumstances, your house prices where you're buying, your rent prices where you're buying. Okay, and let's see what happens. Right, I want to compare the following two options to see which one results in outright home ownership fastest. Option 1, buy a home, buy a £300,000 home with a £30,000 deposit and a £270,000 mortgage over 32 years, because that's the current average for first-time buyer. at 5% interest rate, because that's roughly what they are for low deposit mortgages, right? Now, what I was suggesting you guys do is that you do your own numbers. You put in your own numbers. Please include stamp duty and conveyancing costs. Please also include maintenance costs at 1%. Okay. Budgeted at 1% of the property's value. Assume 2% nominal house price growth. Assume what have we got now? 3% CPI inflation. And assume I can't pay the mortgage off early. Then compare that with the option of renting a property with an initial rental amount the same as the mortgage payment, because that story from Hamptons just says it's like 29 quid difference, right? With annual rent increase of 3%, where I invest the £30,000 plus the conveyancing and stamp duty costs I've saved from not buying. And am able to invest the money I would have been spending on maintenance costs if I had bought. Assume that money is invested monthly in a portfolio of relatively safe investments, e.g. gold, S&P 500, ISAs to full allowance, etc. And apply the real rate of return until I have accumulated enough to buy the property I would originally have bought at the price it will be in the future. How long would that take? Right, so listen, I'm sorry for that boring thing watching me type. Let's hit reply and see what happens, okay? And this is I think what's really amazing about it is how long did that take me to type that? I mean, I'm sorry, that was not the most entertaining piece of video I've ever done, is it? But You see, while we're waiting for Grok to do this, this is exactly the baseless counter argument that I get. I don't get a mathematical one going, oh, let's just not apply emotion. Let's actually just apply numbers and see what happens. It's, oh no, it's dumb. It's hypothetically dumb. This kind of reaction, and I like cowboy music. I'm not picking on you, but this is a very typical reaction. Oh no, that's just stupid. Is it? Have you done the numbers? Let's see. Okay. Conveyancing costs, renting and investing, right? Nominal return. So assuming a 4% per year, 7% minus 3% inflation, no mortgage early repayment, monthly. Okay, option one, blah, 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 blah. Time to outright ownership, 32 years. And it's then worth 565 at the end. Renting and investing. So I will copy and paste this so you can just have a look at it yourself. But in that particular example, a lot of calculating, right? Let's just scroll to the answer, right? Let's get down to here. But conclusion. Okay, so in this one, option one, buying, results in outright home ownership faster at 32 years compared to option two, right? Which takes approximately 32 years, so about the same. But the difference is small. Buying is just slightly quicker under these assumptions. Okay. So that's assuming a 4% rate of return. Now, most people who are investors, and what it comes down to most of the time is, how confident are you at being able to get a consistent rate of return on your investments? I did a thing earlier where I said, look, what if I did these investments over this period of time, what is a typical rate of return? And it was higher than that. It was 5%. So I'm going to just ask a follow-up question. If the net rate of return, if the rate of return net of inflation was 5%, how much time would it take off time to buy with renting and investing? All right, guys, I'm going to have to go in a minute, but a small change. So that 1% change in your actual rate of return is crunching the numbers. This is what it just does so much work in such a small amount of time. So that 1% difference reduces the home ownership and option two of renting to by 4 years. So you then own it after 28 years. Okay, this makes option two. Do you see how sensitive the differences are? And of course, it's the rent. It's your rental situation. It's the price of rental properties where you are. It's where you choose to live. The variables are endless. I recommend you to go and do that yourself. I've got to go, guys. I'm late for a meeting now. Very important one. Thanks for watching. Have a fantastic weekend, and I'll see you next week. Thanks, guys. Bye-bye.